Hello, this is Vance, and this is Thursday, February the 9th, 2017. These are the CL trades for today using the slow hand method for price action. Fortunately, I wasn't trading for most of today. I had a doctor's appointment, got some eye thing that they got to take care of. It was at the ophthalmologist, and he was supposed to be in there at 9:30, and I didn't get to see him until later, so I kind of missed most of the morning. But that doesn't stop me from giving a few explanations here, so let's talk about that. We'll talk about the trades today, what I saw, and a couple things I want to focus on is the difference with different types of price action. And what I mean by that is, now this is the overnight, of course. You can see this is the overnight chart right here. I've got this kind of a range where price is kind of traded down and traded up. There's a difference to the types of price action. Now, both these areas, this price has moved up, but this price moving up, you can see that you have pullbacks all the way along here. Now, of course, this is the overnight, but you see these pullbacks. Price is moving up, but these bars are kind of moving back and pulling up and finally topping out at this area. Whereas this one right here, this area right at 9 o'clock, you can see that this is really unbroken. This is really kind of moving straight up. So this kind of price action is different from this price action. Likewise here. Price is trading down, it pulls back a couple of dojis, pulls down a little further, it kind of pull back, and you can see this, even though this price is trading down, it's not trading down the same as, let's say, this move here. You only got one doji in here, but price is traded down more rapidly here. And in this, it was quick. I mean, a couple of small dojis here, but most of it's down. It's different from this. You can see that the magnitude of move, or the fits and starts, isn't completely as long, and as a result, the time is probably going to be longer as well. It takes longer for it to come from here down to here. Now, I think that's important to keep in mind, because if you're looking at going long or short based on the previous price action, you have to really think about how price is responding at a certain level. And what I mean by that is this. If price is moving down on a reluctant basis, when you get a strong bar in the opposite direction, whether it's a short or whether it's a long, you have to be really more inclined to take that. And that's why I've got this one marked right here. Price has moved up. It's kind of turned over. It's coming back down. But as it's getting close to the open, you can see this bar here and this bar here. You got room to get out. I think it's worthwhile taking this trade because, you have a little bit more. This is off of this one, it's a second entry long even, but the point is that it's taking a lot longer to come down in this direction. Now, how does price respond when it gets to the top of this channel? This is a previous double top right here. You can see price pulls back. You see we've got these bars as they're painting. They come back down, pulls back here. We get a start here, comes back down here again. Now, why would I take a long here? Why wouldn't I go short? Because if you look at it, this is a first entry here. This is really a second entry short right on this one. Why wouldn't I go short on this one? Well, the reason I wouldn't go short, I'd be less inclined to go short, is that despite the fact, now prices can do, there is a target, we are above here, but the challenge is that this was quite a dramatic move up. And if you look at it from this perspective, you can see price, it trades down, tries to go up, comes down in this area, pulls back, tries to pull down, pulls back, pulls down, and then finally we get another bar like this. Now, the point is that by taking this bar, and yes, it's at the top of a channel, I see this as, on a broader basis, there's one pullback, it really pulls back again. This is a second entry long off of this one, basically like two pullbacks. Pulls back here the first time, makes a new high here, pulls back a second time, and so that's why I think this is worthwhile of taking. And on top of that, because this move up here, I think that there's maybe buyers that are willing to take price higher. So I think that sellers are kind of giving it up right here. They've already tried to take it down. They can't. So if anything, if this is a failed second entry short, and it starts to overlap. So if this was a second entry, wait to see how it's going to respond after a strong move up like this. And you can see what happened is that we had another jump in, and this move is a measured move. And it's a measured move by almost exact the same amount. You can see it right from here. It's right to the tick. Okay, we get to the top, we have a pullback, price is going to go up a third time. We can see that we have overlap, we have another bar, and a fairly strong bar here. Is this where to go in? So you have a first entry, pulls back. This is a second entry long right on this one. Okay, now you have to realize that we're going to be going long. It's got to break the top of this channel. So let's take a look and see how it turns out. We have another bear bar here. We have another small bar here. We have a doji, nondescript bar. We have another small doji. Now, you see a pattern now. Let's take a look at this one here. Now we have this bar right here. Now we've got 6 bars, 8 bars, 9 bars that are really, even though this one they're similar in length to this one here, I have to say that this is kind of stopping up a little bit more. In other words, we've already had the 2 measured moves here. We've already had this rotation, which is in plus. Let me see. I think it's from this area even. It's we had a move up of 43 ticks, and really from off the bottom is 56. So remember what I was saying about 30 tick rotations and how long that takes and how it can turn over. Plus, we have to look at the time element in here. And if we look at timing, let's take a look at how long this is taken to complete. So by this time, this bar kind of comes, makes its way up here. It is, we've already got 10 minutes of this back and forth. We have another slightly bearish bar. We have a bullish bar that rejects, stops, doesn't finish up. It makes a test up here and turns back. We have another bearish bar. Another bearish bar. And we'll see the pattern here. The difference between this one here and this one at this top here is because, we do have almost the same type of pullbacks, but you can see that there's more rejection, there's more indecision here. And that's just the way I look at it. Now, would I have taken this trade here? I don't know. I'm not sure if I would or not because I wasn't here. But the point is that if you were going to take a trade, you'd have to take it right here. If you were going to go long, your target would have to be up in somewhere in this neighborhood. Now, in order for you to take a trade, the only way to take a trade like this at the top of a channel is to really limit in on these things. In other words, gives yourself some room. So if you get in on a limit trade right here, right near these bottoms, and it starts to turn over like that, 2, 3, 4 ticks, but it just can't find its purchase, at least you might be able to get out with a break-even trade if it doesn't go in your direction. Because if it doesn't work out within a couple of bars, 2 or 3 bars, then you should be looking at closing it out. I mean, it's hard to kind of talk about it and to teach it unless it's in a dynamic situation. And remember, every single trade is going to be different. There's no 2 trades that are going to be identical. I mean, there are tendencies that you're going to look for, but they're never going to be the same trades. There's going to be slightly different contexts. And that's the challenge of trading. People expect that it's always going to respond the same way every time, but there is a certain element of randomness in trading. Okay? So, as you can see, price starts to turn over, and it does take a time to work out. But as you can see, it really it collapses here. It heads in the other direction. And so, this is, where do you actually know that it's going to do this? I don't. I mean, the point is that the target's down here. You've got your 15 tick stop, but whether or not I would have taken this trade right here, I'm not too sure. I'd have to say that you have to limit in. So I'd have to say that was more of a risky proposition in that regard. I mean, your risk-reward ratio is right. I mean, the fact of the matter is 15 tick stop, 15 tick target. That's why in days like this, you really have to be specific about those targets. You want to make sure that you've got the 15 ticks is before previous high. If not, you've got a strong bar going into this in order to go longer, for instance, and or your stop is above what was previous resistance or previous support. So keep in mind that you want to be buying weakness and you want to sell strength. And so if you see this as strength here, as weakness. If you see this as strength, you want to buy weakness and you want to sell strength. So if this is strength and it starts to turn over, then you have to sell it. If this was the strongest that it could possibly be, then you have to sell. Now, as we go through this, we step down here, prices blast down to this area. Okay, and you can see the same kind of decline that we had in this direction. We had this decline here. So this took up this pulled back as much as we gained on this leg right here. Now, how is it going to respond to this bottom level here? Like, if we say that, let's say that this is the bottom, how's it going to respond here? So we see that we have an immediate turnaround. And now we have these bars like this. Okay, so if you can say now, would you go long here? Why don't I mark this as a long trade? Well, there's a concern with that. Number one, if I've had one leg like this, I may have another leg down in the same direction by the same magnitude. So that's the first thing. The other thing is that where's my stop? If I'm going to go short, where's my stop going to be? Well, my stop would have to be somewhere in this neighborhood. if this is, if I want to see a strong bear bar before I take a trade. And the thing is that my stop, in order for me to be in good shape, is that I want it to be above the biggest previous swing. So I want it to be up here. So that kind of eliminates that. If I'm going long, I want my long to be down low on a bar with my target being before these tops here. Now, where is that double top? I would have to say that this area right here, right about 53.15, has to be my double top. So where's my target? So if it's 53.15, to give me some room, that means that my entry's got to be at 53 flat. And so is there a good entry bar at 53 flat? Well, this one's too early. This is nondescript, and this is heading the right. So the only real bar is here, and it's a marginal one at best. Now, that will get you to that area, and let's take a look at it. Now, would that have worked out? Well, it didn't. It failed near this area. Now we've had this. Now we can actually put in the top of this channel. Now, I'm not saying that it's going to hold, but at the same time, I want to make sure that my 15 ticks is within range. Step through it. We have this sideways motion again, right here. This is a second entry short. So you can see this first entry pulls back, second entry short right on here. Now, would I take this trade? The trade is that now my stop is in pretty decent shape. You can see it's above where at the daily high. The daily low, my target is below this area right here. Pretty close. I mean, it's not. You would like to see your target more along the lines where there was a bigger amount of volume or there's more touches, but it likely is acceptable. So would you take this trade here? Did it work out? Well, the fact of the matter is, look at how it pulls back, turns over, and you would have gotten your 15 ticks out in that case. Just got your 15 ticks out. Because now, as soon as it gets to this bottom of this channel, we have a big springs out of here. Now, would you take this trade? This is a second entry long, first entry pull back, second entry long. This is your signal bar. You take that trade. Where's your target going to be? Well, if your target's right here, you may take that trade. Is it too early? Well, again, is this move down here, is there going to be another leg? This kind of move down, is it look more like a kind of a hesitation move like this one? Or is it more like this one here? That's what I don't know. It seems more like this one, less like this one, because we had a couple of pullbacks. This one's pretty much straight down. Now, after getting in on this trade, we have this bar right here, which is a doji. Pulls back a bit, it's moving sideways. Is it time to turn this trade out? We get another trade here. You're holding on to it. So now you've got 6 bars side by side. You're still, let's say that you got in on this trade. Do you actually close this thing out? Do you wait for it? Or do you tighten it up? Where did it go? So if we got in on that trade, where would it go? It didn't make it. You can see it failed at this area. So at this point in time, this trade not only didn't make it, but this one here, is this a short? Because we're talking a second entry short right on this one. Now, again, you're looking at where's your target? Your target here. Where's your stop? Well, your stop is going to be near at the bottom here. Something like this. Would that be a trade to take? Well, it would have been. It would have worked out because not only is it turned over, it got to your first target. Now we're down at the bottom again. And lastly, and this is the last trade, we have a first entry. Now, do you take this trade? I wouldn't agree with that. Price pulls up, pulls back, and once price kind of dips down here, I think this is the better place to take it because it's really tested this area. We have a break of the trend channel, break to a new low. We got support from the left-hand side of the chart. Better trade to take. What happened to it? Comes up to the top. Do you take this short here? Well, we had this one move up. It moves sideways. If you're in this trade, I don't know about taking a new trade here, but then it breaks out and it finally moves higher. And so this was the trade of the day. It actually broke through this trend channel. Now, the problem is that any of this stuff that takes place on this chart takes place in real time. You have to be trading it. And unfortunately, it's every time you come up, it's going to be a little bit different. Is this perfect? I mean, is this a perfect day? Well, it was a pretty tight day for one thing. We didn't have a lot of the trade range was kind of narrow. When you have these pullbacks like this, you can trade both sides of it, but there's exercises that you can do, not on live, but there are exercises that you can do that can help you see these things. And not sharing them with you at this point in time, but there are some things that you can do to help train yourself to look at both sides of it, both sides of the the equation per se, and try to get a feel for trading and to be in the market essentially. And there's ways of doing that. Anyway. I hope this makes some sense. I know that lots of individuals really like the idea if I step through it to show them what you should be thinking about at certain periods of time and what kind of targets you should look at. But the thing is that you should look at your stop loss. You should look at the entry first, stop loss. You look at your target, and then you calculate your risk and reward and determine whether or not you're going to take the trade after you decide on those 4 points. So that is, you look at the entry, you look at your stop, where your risk is going to be, you look at your target, and then you consider the risk-reward ratio. And if those things are positive, then you can decide on whether or not to pull the trigger on the trade. Should do that every trade. Anyway, this is Vance. Thanks for watching. If you have any questions, please let me know. Bye for now.